market expert, talk to us about exactly this. Sudeep, IndusInd Bank trading at one-time book. Obviously, it's probably likely going to be a couple of more quarters before we get better visibility of what is in that book. But currently trading at one times book, and you can't ignore the fact that it's a Nifty 50 stock. It is a large company. It's one of the largest, one of the top 5 banks in the country, private sector. Do you believe that this one is something that investors should venture into?
I do, Harsh. In fact, this is exactly what my thesis has been. I think the change of management has been very good. Mr. Rajiv Anand, who has come in, is an experienced hand with a lot of years of experience. He's putting together a new team. Whatever the challenges were, that's been cleaned up. Write-offs have been taken. I'm sure at some stage incremental capital will be raised. Promoters have already committed to put in money to maintain their stake. Things are looking good, and absolutely valuation-wise, I think things do look really, really attractive. But the issue is, if you are getting in now, be patient. You need to wait for at least a couple of quarters before things start showing up in terms of performance. A little bit of cleanup is still probably required, particularly in the unsecured loan book, which includes the microfinance assets, where there has been a lot of challenges over the last few quarters. Overall, the industry itself has been suffering. So IndusInd Bank, get in, but plan for a year's hold if you really want to benefit out of this investment.
3% move on IndusInd. It's given a decent return from the lows of 600, 650, I believe it made,
Yes.
52-week low. It's given a decent bounce up from there. Where to from now?
Yeah, in fact, the stock had broken the 200 DMA in March or April 2024. And after that, almost like a 14-15 month period, the stock has managed to break past above the 200 DMA. That's a very important litmus test which we look out for on the charts. So the prospects now look to be a little better for IndusInd Bank. I'm not saying the best in terms of the private sector banking names, but a little better because the stock has managed to see that sharp phase of correction. It's trying to recover its lost momentum back again. That's a process which stocks take for at times maybe few months, few quarters on a trot. The low the stock had made for of 600 was in the month of March, April 2025, and from there on the stock is just about trying to recover the gap. That gap down for IndusInd Bank started off at closer to 885, 890 levels approximately. So which means another 40-50 points to go before the stock tries to find its momentum back again. So looks to be a better chart than what it was maybe 6-7 months back.
Okay, so much better chart. The other one that's doing fairly well for itself, Sammaan Capital. Let's pull that one. JP Morgan has given a view on the bonds of Sammaan Capital basis the news that has played out. They seem to be suggesting, in fact, an overweight rating on the US dollar bonds of Sammaan Capital. They believe that, in fact, one cannot ignore the fact that there's a strong promoter coming in. Also, what they're suggesting is that you've already seen the news flow that has come through. They believe that that news flow is unlikely to impact Sammaan Capital, and this is not a Supreme Court ruling against the company, and therefore they're willing to brush that off. They continue to hold their overweight rating on a Sammaan Capital, Ayesha.
Oh yeah, and you can see some relief actually play out for the stock as well right now after being quite beaten down the last 2 trading sessions. Finally seeing some amount of relief, holding up 2.6%. But Sudeep, what do you have to say about names like Sammaan Capital and all the news flow around it?
Well, Aisha, I'll be careful. I think today's report and confidence in the bond is good for the company. But overall, I think the entire fund infusion process by the global investor will definitely get delayed because of this stricture of Supreme Court and the instruction of Supreme Court on to the agencies to investigate the issues much more in detail. So I think every regulator, where from Sammaan Capital is expected to get approval for the fresh fund infusion, will be a little careful and will definitely get the process will get delayed, and that doesn't augur well for the company. So I'll be careful at this stage. As and when the capital comes in, I think it's a good bet, and I'm sure it will come in. But at this stage, it's better to be a little careful and stay away from the counter.
Right. Sudeep, we were just looking at M&M and of course, the mighty blue chip that it's turned out to be. That said, the investor day takeaways, and one is wondering if you have to take a fresh position within the M&M group. What is it that you do now? I mean, do you look at the tech play? Do you look at the insurance play? Or do you bet on M&M itself, given what they've flagged off for the growth gems, that they think that the value is going to be pegged at a sizable for 48,000 crore rupees eventually?
Well, M&M definitely is a good stock, and they've been doing pretty well. We do like M&M, the main company in the automobile pack, and I think there are still a lot of legs for the company to move up. The SUV is doing exceedingly well. The tractors have picked up. The their EV business is also gaining ground. So I think they have many growth levers as things stand today. So yes, if you're a long-term investor, you can still go and pick up M&M. Amongst the other group companies, there are a lot of interesting names, but Mahindra Life Spaces is one company which we do like, and we believe there is a significant upside potential as far as Mahindra Life Spaces is concerned. The plan of the company, the way they had outlined today, I think seems very, very interesting. And with a credible promoter like Mahindra Group behind it, I think they can do wonders considering what's happening overall in the real estate sector across the country.
Right. Okay. Well, of course. Back with closing trades right here on ET now, and we're holding out okay. So far, so good. The good thing is that the US futures are indicating some amount of respite, because I was just looking at that. We're holding about 0.3% higher for S&P. The AI fears seem to be abating somewhat, and about a 60-point of uptake for NASDAQ as well, and over a 200-point bounce for the Dow as well. Of course, it's nowhere near to making up for last night's losses. But having said that, at least it seems like the selling could have been stalled if these rates are to be replicated once US markets open later this evening. That said, for our markets, the show of resilience continues, while, of course, the wait-and-watch mode for that all-time high still sort of persists. But we are standing around the 26,150 plus level for the Nifty futures, which is really not all that bad. And now you're again beginning to see a little bit of a pickup. Reliance, for instance, in the last few minutes has jumped back into the green. It's flattened out right now. Bharti is adding some more weight. You've got a Sun Pharma, you've got a Nestle, HDFC Life, Titan, Apollo Hospitals, Trent, and L&T. These are all stocks which are beginning to nudge up as we speak right now. Sudeep, what's the story on Reliance? Because yesterday, when the markets did fall, one thought that, it's a cute flight to safety to a name like Reliance, which, wouldn't fall a whole lot as opposed to some of the growth stories. But when is it that you will do think that meaningful move in Reliance would come by?
I think the meaningful move will come after happening of two things. One is next quarter results itself. I expect it to be very positive as and when that comes, because the benefit of ARPU increase will be fully flowing in, and there is an expectation of a further ARPU increase going forward. Probably a hike in the prices will be taken before the end of current fiscal, and that again should be a positive trigger. Apart from that, of course, as we know, the AGM, there was an announcement that value unlocking by way of listing of the telecom business will be done in the current financial year, first half of the next calendar year. So somewhere that's going to happen, and that value unlocking event and announcement will also trigger a lot of excitement in the counter. So I think these are the triggers which are known. Apart from that, of course, something can be done as far as value unlocking is concerned on the retail business. That's also become pretty big, and some value unlocking measure can be taken there. If and when that does get done, there will be excitement in the counter. Overall, the O2C business also has been by and large performing well. There has been some concerns that because of the reduction in Russian crude purchases, the margins may come down. But I think the way the GRMs are shaping up, the way the things are moving, I think Reliance is very well positioned to maintain its profitability and revenue from this segment as well. So we are positive on Reliance for quite some time, and we maintain our positive view with a slightly long-term view. I think Reliance can be bought even now.
Sudeep, I wonder what your view on an Asian Paints is. It's the other stock which has stood out in terms of Q2 earnings. The margins came ahead of estimates, so that's a positive. But what's the sense like from here on? Is the kind of growth that it's seen on the top line, which is volumes, largely a function of the fact that the base was super low, or do you believe that they can start gaining market share again?
Well, I think, Harsh, a couple of things. One is the result undoubtedly was fantastic. I think it did beat everybody's estimates in the street. Nobody expected Asian Paints to come up with the kind of numbers they came up with. So, hats off to them. Considering it was a monsoon season, considering the competition from Birla Opus, I think it was a fantastic set of numbers. But having said that, and at the current valuation and the price, I don't think I will recommend a buy in Asian Paints. Though there are multiple reports, but I think competition is there to stay. And we haven't seen the last of the price competition as well as intense competition in the market as far as paints business is concerned. We can get into the nitty-gritties of during the monsoon, the interior paint segment does work better vis-a-vis exterior paints and things like that. And Asian Paint is strong in that interior paints. So they had good numbers during the monsoon, but it may not be so when the interior and exterior combined both picks up in demand post-monsoon. But fundamentally, I'm saying that, at this valuation, with the kind of competition we are witnessing, both from Birla Opus as well as Jindal post their taking over of a very large Dulux, which is quality-wise a leader in the market, I think we have to be careful on Asian Paints.
Kunal, on Asian Paints, 1 month chart, 16% returns. 6 month chart, 25% returns. So it's been an outstanding investment if you've caught it at the right time. What next for it?
4-year chart still negative.
That's true.
For Asian Paints.
That's absolutely true.
So my point is that yes, short-term wise, it's gained momentum, and that's why it's starting to look very attractive. But then you have to look at this in the context. And 2021, 22, 21 second half, 22, 23, 24, they were one of the best years for the market. So I think in that zone, the stock has underperformed. So there is a price-wise underperformance for Asian Paints. There is a time-wise underperformance for Asian Paints. I think the stock is now starting to warm up to cover up this huge amount of underperformance. Just to give one example, what happened to the auto stocks, not a like-to-like comparison, but Maruti was a huge underperformer, and M&M managed to steal the show. I think 750 to 3,000, I think, in the matter of 2 years. Maruti remained at 10,000, 10,000, 1100 mark broadly. That stock is now 50% up as compared to M&M, which has gained another 10 to 20% higher. So outperformance is coming into other set of names. I strongly believe that Asian Paints could be a candidate which can go into that outperforming spree for the next many quarters to come by, not just for the next couple of weeks or couple of days.
Okay, that's the juxtapose on what the charts are up. I mean, what's that indicating in terms of an investor behavior?
Well, as far as Grow is concerned, we have been positive and we maintain our positive view. We believe that the company will perform exceedingly well going forward as well. They have the largest number of customers already. So as far as the broking business is concerned, the numbers we see are based on the market, based on how the market behaves, the numbers will move, but they will definitely continue to maintain their leadership. But the more interesting is the newer businesses which they are getting into and which has got significant potential. One is margin funding. I think that's going to be a big book. Today, it's a very small part of Grow's income. Now that they have the potential to get to a significantly higher level, which will be revenue accretive and margin improving. Apart from that, the other adjacencies like wealth management, distribution of mutual funds, insurance, and other things can be easily added, I'm sure will be added to their bouquet of services, which will significantly improve their overall earnings and margins. So we are positive. I think from a long-term, at least 1 year kind of perspective, even at current level, it does look good. Some of the other newly listed, we are not so bullish. One is Lenskart. I think the valuation does look very rich and full, considering that the business Yes, it may be technology at the back end, but otherwise it's a brick and mortar business where you set up shops and sell spectacles. So I think the valuation looks really, really rich. As far as Physics Wala is concerned, I think they've got a good thing going. The education sector didn't get much funding during the current fiscal, but Physics Wala changed that, and probably there'll be revival in the interest in this particular sector. Yeah, the valuation is not cheap, but from a long-term perspective, still it can be looked at.
Okay. So that's on some of the fresh IPOs that have come through, and all of those have in fact come on our radar as well. Some of the defense counters also in focus. I was in fact just looking at the last around 13 odd months, because that's when we clocked our all-time high, Aditya. And when we did from the last time to if we had clocked our all-time high today, BEL would be one stock which really stood out within the Nifty 50 pack. In fact, it would have been the top gainer in the Nifty, 45% up. What do you make of some of these defense names? They've done ever so well. On the next leg of the rally, can it continue, and how sharp will it be? Aditya.
I think defensive stock. Hi, Harsh.
Hi.
I think defense stocks have done pretty well in last 1 year or so, but since last few weeks and months, we have been seeing not much action so far. But the recent action is pretty encouraging, given that we saw a move in HAL yesterday, and stock is also buzzing, and BEL is. So I think the best candidate in the defense pack should be HAL.
Aditya, we'll just get back to you. We'll try and fix that video with you. We'll take a very quick break, come right back. We'll continue our discussion with our experts.
With Aditya Arora along with Sudeep and Kunal, of course, but Aditya, your take with regard to defense is what you were putting out. Give us a sense. BEL is the top gainer on the Nifty since the last time we notched a record high. What next for it, if you have a view, and what next for the defense pack? Because there is pressure on that pack today.
Good afternoon, Harsh, and good afternoon, everyone. I think defense has done pretty well in last one and a half year. But recently, not much action despite a lot of heavyweights in defense pack getting good orders. Still no action so far technically. So I think the game over here is right now consolidation. The trend over here is consolidation. And BEL is the best candidate in defense pack. But we'll wait for a breakout for the momentum to start. Currently, I think the trend is pretty much neutral on three big names like HAL, Masdaq, and BEL. But a breakout should be watched out in BEL, and the breakout level for the stock is 440, wherein a new swing high would be registered, and stock have good momentum over there. But currently, it's an avoid.
That's the call coming in on BEL right now. Just looking at some of the other names, and Maruti, of course, is holding out well. There's Interglobe Aviation, which is currently at 58.70 thereabouts. Max Healthcare looking good there too. Tata Motors, passenger vehicles, Tata Consumer, Infosys, ITC. These are some names which are trying to bounce back. In fact, Sudeep, that reminds me, what's the take on IT? I mean, at least it's trying to make a comeback sporadically, but fundamentally, are you a believer?
Not really. I think, at this stage, I don't want to bet on Indian IT. Whenever there is an anti-AI trade, so to say, Indian IT is kind of showing positive signs of movement, because we don't have AI as far as our IT companies are concerned. And, people are moving to Indian IT when there is an anti-AI sentiment in US markets. But that is not going to help, fundamentally or structurally Indian IT companies. If you look at the reality, their margins are under pressure. New business development is not gaining momentum, considering the volatility in US markets and the lack of AI tools which Indian IT companies need. So overall, I will be kind of holding back. They will continue to grow, but mid-single-digit growth is what they will continue to show, which doesn't warrant the kind of multiples they are already enjoying. So under these circumstances, I'll be careful. Of course, some of the niche IT players, I think I've discussed this earlier. Travel and tourism as a sector is booming world over. Now, companies catering to travel and tourism in the IT space, whether it's a RateGain Technologies, whether it's Coforge, whether it's some other companies which are servicing travel and tourism, they are bound to do well over a long period of time. Similarly, there is a transition happening as far as automobiles are concerned from ICE to EV. And a lot of IT companies are playing in this space and providing technology for this transition, as well as facilitating the transition. So, the companies involved in this, whether it's a Persistent, whether it's a Tata Technologies, whether it's a Coforge, I think they will continue to do well and they have a scope. But otherwise, unless you are catering to a niche which is growing rapidly, I think Indian IT needs to be viewed with caution.
Indian IT to be viewed with caution. Now, before I take a technical view on that one, let's quickly pull out the rupee, and the rupee has slipped to a record low now, 89.46 against the US dollar, and the slip is quite sharp, frankly. So that's the one piece which is playing out. You want to keep your eye out on that one. Nearly 1% lower on the rupee, 0.75% in fact. So the slip was sharp. And we'll wait and watch as to how that one plays out towards close. But IDBI Bank, there's an update with regard to the stake sale. There's a government source which is suggesting that RBI has given fit and proper clearance to IDBI Bank bidders. And there are sources suggesting that maybe Kotak Mahindra Bank is one of the front runners for the IDBI Bank stake sale. There you go. You can see some spikes on the IDBI counter as well as the reaction on Kotak. So you're seeing a reaction on both those counters, IDBI as well as Kotak Bank. On that note, before I go to Sudeep, Kunal, Kotak Bank, would that feature on your list?
Yeah, I think pure in terms of risk reward, yes, the stock looks attractive at current levels of 2,100, 2,080 thereabouts. But then again, the question is that, if the private sector banking stocks as a pack have to make a comeback, then we can expect a material upside for a stock like Kotak Bank. Otherwise, I would probably expect maybe a 2140-50 as a very immediate target for Kotak Bank.
2140-50 on Kotak Bank. Okay. Sudeep, would you like a Kotak Bank at this point? It trades at roughly 30% discount to its 5-year averages in terms of price to book, if I've got that number right. 2.1 times 1 year forward is what it trades at, and 3.1 is the 5-year average. And you also have a decent growth uptick that we've seen in Q2 for a Kotak. Are you at all positive?
Not really, Harsh, to put it simply. At this stage, we are positive on the PSU banks, and some of the PSU banks, including State Bank of India, is trading at 1.1 time of book. So they are significantly cheaper. There is a merger of smaller PSU banks into larger ones, which is in the works. That should create excitement in the market. Some of the smaller PSU banks, they've cleaned up their balance sheet, have a good asset quality, nice branch network, and quoting at a significant discount to their private sector peers. So whether it's a Bank of Maharashtra, Central Bank of India, do look attractive at current levels. One can't comment on which bank will merge with whom and when that will happen. But fundamentally, some of these PSU banks, valuation-wise, do look attractive and are definitely worth buying. I don't see anything major happening as far as private sector banks are concerned. While Kotak has improved, numbers in Q2 were impressive, but I think they have a lot of asset quality issues, particularly in the unsecured loan book, which includes microfinance and other unsecured loans. So I'll be a little careful even at this stage. Of course, I'm not commenting on the possibility of their taking over IDBI Bank and what can happen and can't happen on that. That's a different discussion altogether.
It is, and we'll keep that for some other time. But Sudeep, great to have you on the show as always. Thanks for your time. Okay, let's talk about what else is looking tradable right now in the market. Half an hour to go, literally, before we wind up for the week. And Aditya, any trading ideas you would have for our viewers?
Sure. So I'm seeing bearish structure in the market right now, given that we have lost all the gains on the index level since the morning, and the global backdrop is pretty bearish. We have seen good selling pressure in international market, and level wise also we have seen rejection in Nifty at 26,200 odd levels, where there were quite a lot of sellers out there, and even on other index, Bank Nifty 60,000 is a psychological mark where a lot of call writing is present. So my trading idea for Monday would be sell on Bank Nifty, currently trading at 58,900. Stop loss over here should be 59,600, and target on the downside would be 58,300 to 58,000.
Okay, on that note, let's take a very quick break and we'll come back and track the last lap of today's trading session.
Stocks which are buzzing. DCM Shriram, Anupam Rasayan, 8 and 5% higher respectively. Your take on a couple of those big buzzers?
I think DCM Shriram clearly stands out with solid gains of about 7 odd percent, and the kind of volumes which we have seen is more than multi-week average. So I think institutional buying is happening in this counter. This could sustain the volatility in the market. So this one would be a buy at 1266. Stop loss is 1190, and target is 1340 to 1400.
Okay. Kunal, PSU banking index looking slightly more subdued today. Par for course, you're positive, of course, with regard to PSU banks. Par for course, just another day. It's going to get brushed off next week.
Not necessarily. I think there could be more correction in store for the PSU banking names, but I think it should be a healthy correction because third consecutive month for the PSU banking index. In the last 3 months, we've moved from 6,700 on the Nifty PSU bank index to almost 8,600, which we tested yesterday. So more like a 1,900 point rally, a 30% move for the PSU bank index in the last 3 months. And that too, prior to that, the sector was a underperforming sector. From the entire, from the overall market perspective, and of course within the banks also. So I believe that this could be a healthy consolidation or correction if it happens for the PSU banking index. And I think one should not hurry into buying the dips immediately also, because we've seen historically, with many of the sectors that when there is a correction of sorts, you could be looking at least a 5% to 7% swing correction for many of the indices. So, and for individual stocks, it could be a little bit more depending on the beta of those stocks. But I think in that sense, one has to wait and watch.
Okay, that's the take coming in right now on PSU banks. Having said that, Aditya, I want you to come in on some of the charts of the banking names. Well, today, of course, there's a bit of a relief play out in IndusInd Bank. Like Kunal was flagging off, PSBs is where he finds opportunity. What are some of the tradable ideas that you have within banks?
I think currently, given the chart structure, my trading idea would be on the short side. I think a lot of traction is building, or the volume or the pressure is building on the downside. So my trading idea on the banking space would be on the bearish side. And my top pick over here is the Indian Bank, which is the top loser in PSU banking space. So this one is a sell candidate at 850 odd levels. Stop loss is 890, and the target is 800.
And what's breaking is Kotak Mahindra Bank list.
I think Interglobe Aviation has been experiencing some sort of volatility, given we have seen favorable prices in crude oil recently. So this one is a buy at current market price of 5848. Stop loss should be 5750, and target is 5950.
Right, we're slipping to the day's low as we speak. We're 0.5% lower on the Nifty 50 index. Some of the pressure pockets, there's a JSW Steel which is down 3 odd percent. Hindalco also down by a similar margin. Tata Steel, so it's the metals pack which is dragging the index lower. Kunal, do you have a view with regard to the metals pack?
Yeah, I think it's been a sharp correction. My sense is that it's more to do with the movement on the dollar index, because all of a sudden over the last, I think, 3-4 days or so, you saw the dollar index spiking up or moving above the 100 levels from 98.9 thereabouts. So I think that was one of the reasons why you saw the sudden correction coming by. But we need to wait out for a point where the trade settles, or the trade settles for many of these metal counters. As of now, it looks like that many of these stocks are retesting their respective 50 DMAs or 200 DMAs, as the case would be, in terms of a potential retest. If these averages hold on for these stock prices over the next couple of days, then we can expect a near-term bottom for the metal counters or metal stocks, and then an eventual bounce back.
Okay. Well, counting down to the market close, Ajay, we'll let you go on that note. Aditya, good to have you on board as well. But I'm going to quickly toss it across to Snehi for the closing trades.